Hi traders, good morning, good afternoon, good evening. I hope all of you are doing good. So we are back with another weekly session to analyze Bank Nifty. So without wasting further time, let's get started. So today we are using investing.com and we are going to do the same analysis. First we start with monthly analysis on Bank Nifty, then weekly, then daily, and then we go to the smallest time frame and see how we could have identified the trend. And I will also show you how to adjust the butterfly strategy on a intraday basis, or you can use it on a positional basis also. So as you can see, this is the Bank Nifty chart. So you can see if you draw a line from here, the trend is up and the market has retraced from these levels. So now after this position, so after this setup, as you can see, this is a green bar and then followed by a red bar, and whenever this formation, this high is taken out, there is definitely going to be a big rally. Okay, and the location is very important. As you can see, the location was above the 200 period moving average. That will be, just a second, let me show you where is 200 period moving average. So this is a future chart. Let's see, it has to load. Draw a trend line from the bottom to see how is the market doing. So this was the trend line. Okay, so this was the trend line, and the trend line broke and market started coming down, and then you can see the market has retraced at the previous levels. This was the level where it has crossed. So always look for these kind of candles where a sudden fall has been stopped and entire reversal has happened and the red candle has been taken out by a green candle. So this high should be your point of support, you can say. Once the price has moved up, it will be a resistance if it is on the upside. Okay, so now at this resistance the price has been rejected. If you want to plot, just for an example, if you want to plot it, where is the next, then you can see this is another level. Okay, this is another level. So this is about 10,266. So this was the level 15,683. So this is how you look at the levels on a monthly basis, that till which level it can come and stop. So market made a low of about 16,125. So always a level is not an exact number, it is the zone, complete zone. It can be starting from somewhere here also, like you can see all these narrow range candles. It can start from here and end from there. So this entire zone is a level. Always look at that way. Now if we go on a weekly time frame, we expect the market to actually take a resistance at 20 period moving average as per our last video, but the market is too strong and there is a lot of buying coming in from FIS and it has actually taken out the 20 period moving average as well. So we can expect a further rally, but after this month finish there will be a definite retracement till this level. Okay, next month can be a retracement month, and then if this high is taken out, then we can expect a further rally up. Now let's see the weekly time frame. Weekly time frame also okay, we will use Sherkhan for analyzing today. So this is the best charting software you can find, and I don't think any other software, there are two best softwares. One is TradingView, another is ShareKhan. So this data is pretty accurate on this. If you have a brokerage account with ShareKhan, you get this software free of cost. So I use it mostly to track charts. This is pretty clear. So now we are analyzing it on a weekly time frame. On a weekly time frame, you can see the market has moved higher. From here, there should have been resistance here, but the volume was very high, and the market has actually showed us good positive response. So now what is the next step now from here? So from here, we can expect a little bit of fall to this level where it can take support and then again start to go up. So this is how market behaves. Usually whenever there is an up move continuously for 4 to 5 days, then definitely there will be a retracement. Like here we had 1, 2, 3, 4 days continuously it fell, and fifth day there was a green candle. This was the place when I thought that I should buy and make a portfolio. This is the place I've made the portfolio, and still I'm running the profit still here. So this is how this pattern always works. And if you want to know more about this pattern, go to my previous videos, price action, and how to identify candlestick patterns. You will understand, because you'll always have like maximum 4, 5 or 6 candles, and after that whenever you see a green candle or a candle like this, you can expect there will be a reversal. So you need to understand those very carefully, and the location of that is also very important. Here the location, this was very far from this moving average, which is our 200 period moving average, and this is our 20. So whenever the price goes away from 20 and 200, it will definitely try to come back to 20 first and then again 200. If it has to fail, then it will fail here and then start going further down. So this you can see on a lower time frame. Let me show you a lower time frame on a daily chart. See, on a daily chart here, the trend has been, it got rejected here at 200, formed a nice bearish engulfing pattern, and then it came back. It was far away from 200, it was away from 20. Here you got a signal, which is a green candle. Here it was your entry above this green candle. Now the first resistance was this. As you can see, first red candle has formed, but it didn't go below this level. It took support and went up above this. After crossing 20 period moving average, the next resistance was at 200 period moving average. Here we can see one candle. This is a daily candle, two candle, daily candle, and after that immediately it took the support at this level. Okay, and then it moved up. Now since it gave a positive sign, a lot of people would have gone long, but having the stop loss below this. So this candle has actually taken out their stop loss. So all the weak hands got cleared here in this move, and after that we can see there was a good up move, and the first retracement again happened on the 20 period moving average here. So here you can see this was your 50% candle, narrow range candle, and above this high is your breakout level. So if the moment you identify this candle, you should always expect the next candle, if it breaks this high, we can go long. So we have gone long here, and the market started moving up. Now when you catch the trend like this, you always use the super trend as your stop loss and continue. Still the stop loss is maintained. You could have made a good profit till here, and if it continues like this, then you will definitely gain, and your exit will be when the price touches the super trend. Now let's go to a lower time frame, that is our 15-minute time frame, and see whether this strategy works on this time frame or not. So here you can see this opened below the moving average. It tried to close above it, but there was a resistance above this, because whenever the stock is above 20 period moving average, you can consider it as uptrend. When it is below, you can consider it as a downtrend. And the simple logic is, whenever the stock is in downtrend and when it moves back to the moving average, then you can always expect to short it here. This is your ideal location to short. This is not your ideal location to short. You should always short whenever this retraces back to this level, either a super trend or a moving average, and wait, because mostly super trend works very perfectly. And if you see a rejection on super trend, a red candle like this, then you can definitely short. And if a candle closes above super trend, then also that's a good positive sign that you can go long. So here it was staying on the moving average, up and down, up and down. It gave some false signals also, where we thought it will move up, but resistance was too high, and then it started to come down. So if you blindly follow super trend gave a bearish entry to you, or you could have shorted here and then waited. If this was taken out, then you could have closed the trade and go long. But since there was a rejection, you could have added one more here and waited, and then it could have gone down, gone further down nicely. Again it went down, super trend was intact. It crossed the 200 period moving average also, then it came down. Here would have been your exit as per super trend rule. So entry and exit. So this is how you could have got. You could have either bought a put or sold a call in this, or made a debit spread. You bought a put and sell another put to make a debit spread, or sell a call and buy a call to make a credit spread. There are multiple ways where you can trade. So now let's go to our see, this was also a good entry for you. The price took a support at this level. This was your support level, and from there it crossed this 200 period moving average. It crossed the 20 period moving average. It crossed the super trend also. 3 indicators were actually taken out by this one bar, and immediately, definitely after this bar, there will be a retracement bar. You should always check. And then on this retracement bar, if this high is broken, then you get an entry. So this is called as RBI, red bar ignored setup. This is a red bar which is ignored, and then it moves up. So the move was explosive on this. So keep a watch of these setups always. And this is complete bullish setup, but it failed because the location was wrong here. This formation is good, but it is near the 200 period moving average, where there can be buying. So on this previous close, it went up, but there was a lot of resistance, and actually this is a good entry only if you want to go long, but this should have had a follow-up candle to break this, but this was a false entry. You could have made a loss here, hitting the stop loss. Now let's go to our option strategy. So today I will show you how do we adjust our butterfly position. So now I'm holding a butterfly. Let's analyze that only. So this is a butterfly on Bank Nifty. I have created it on the downside, so market moved into my direction. Now you can see the market is at 29. When I say market, it is Bank Nifty, so it is at 29,000 236. Okay, so now this leg is in profit already 100. This is already in profit. Okay, so whenever this leg is in profit, you can actually start moving along with the market. Okay, and if the market is moving in this direction, then you start moving along with the market. How do we move along with the market? So we have a profit here, so we book this profit at 28,900. Okay, and then let's do a simulation. 28,900 we book and we go to 29,000. Okay, we buy same quantity. Okay, so we have a lower risk on the downside and we move a little bit forward. So now as the market moves forward, so earlier our position was 28,900 which was in profit. We booked that and now we moved to 29,000. So this is our new strike. So we are expecting the market, this is the bank nifty level, if it starts to moving up further, say it moves up to till 20,000, 29,400, because 29,400 is your center strike which is at peak. So this is your peak profit zone. So if it starts moving further, then again you go and say 29,100. Okay, you modify this. So this is our new strike. So this is our new position now. We are at 29,100. So we changed it. So this becomes like this. But profit is in track. This profit will also be growing once the market starts moving in your direction. And if the market moves further, sit till 29,400, you can come closer up to more 200 points. So our strike difference initially was 500 points. Now since the market is moving in our direction, we say that we move forward. So it is now 29,200. So this is our strike. So this, on the downside we don't have any risk because we have already booked profits, and if the market goes down also from here, it is about profit only for us. It will be 500 profit, as you can see from the P&L chart. So this becomes a complete risk free. And now if you further see the market is moving forward, then you can also start increasing the quantity here. You can have 2 lots here. So like that you can start moving with the market. But my suggestion for you, always do not play around too much with this setup, because here your max loss is limited and max profit is decent. So the moment you start adjusting and fiddling around with these legs, your max loss will change, and if something goes wrong, then this initial max loss will not be accurate for you. The loss can be higher than your profit, so you have to be very careful. My suggestion is that if this butterfly is not working out, it is failing, then just close this and take a fresh view and create a fresh butterfly on the direction of the market, rather than unnecessarily adjusting it and then losing more money out of that. So this way, either you can do a simple adjustment like this. If the market is going down against you, make it safe so that entire downward loss is covered. I just increase the quantity on the sold side. Okay, so now coming back to the center, and if you see this is moving violently upside and you're 100% sure that it is going to move up, then go and buy one quantity extra on the bullish side. So this will change onto this side. So your max loss will be 14,000. Profit is like unlimited as and when it goes in your favor. So these are the adjustments on butterflies. So you can try and experiment it, but my suggestion is always stick to the same basic 1 is to 1 is to 1.5. This is the ratio you're getting on this, so risk reward is decently managed, so you can stay in this trade rather than too much of adjustment. Okay guys, thank you so much for watching, and this video is a little longer, so I hope you like this video, and do share it with your friends and family, and subscribe to the channel and click on the bell notification. Have a good day.